Are you ready to rumble? Cue wind effect. Yes, sir. Everybody bring it in. Bring it in. Bring it in. Bring it in. Hey, let's get down to it. Let's get down to it. Obviously, as people's attention spans are not can't go past 30 seconds apparently. I've got the petition up here, which we've already gone over. We've posted this in videos 2 days ago, and but apparently it was coming out, people, we need the petition, we need the petition. So as of course, like I said, on Monday we did our part to be able to sign Brian's petition to opt out. Speaking of which, guys, we're gonna watch a video about with Fox Business over the current state of affairs of the market, and then, like I said, we got, obviously you can see at the top, we got some things to cover with our AMC, including short interest, cost borrow, threshold list, and also I got a little sentiment. Like I said, I'm not here to start any debacles or wars between people on YouTube. Like I said, all the retail space together, we make a whole. All people that are posting their opinions on YouTube, we make a whole. But I do want to point out certain things that I'm kind of tired of hearing from people that seem like it's kind of line the same thing. Whereas with trades, where you have people that are so specifically saying, "Oh, this is what it is," till it's not that, and it causes people, more heartache than needs to be. But guys, here we are right here with the motion to intervene. Here, guys, I'm gonna have the link posted down in the comments. To click if you haven't signed. But like I said, when we posted the first video, we were at like 1,700. So like I said, here we are on the 20th, going towards 5,000. Like I said, everybody, in my personal opinion, you need to come sign this. The reverse split of AMC will be the end of AMC, and that's what it is in my personal opinion. That's based off of all the certain things I need. Somebody show me a reverse split that has worked out in the favor of retail. Like I said, if you can't do that, I don't know how we're just going to start coming up with, oh yes, this is what we need to do. Anything AA says we need to do, I'm not rolling with it. I mean, if you're still sitting here repeating, he's still gonna look. No, that's not the retail group that we're building over. We're building the ones where we like to look at things in reality. But like I said, here's our most intervened. Y'all obviously see we'll have the link, and then you can obviously see up here on the top here, the handle if y'all need to. But let's jump down to this right here.
Now in studio, Equity Armor Investment CEO Luke Grabari and Great Hill Capital Chairman Tom Hayes. Tom, sometimes extreme bearishness signals that the turnaround's already begun and maybe some of these fund managers are late. But the X factor is the vapor trail that this bank crisis has left behind.
Black
I'm talking
Swan
the most recent
event.
one in March.
Black
Where
Swan
are
event.
you compared to the fund managers in your bullish bearish scenario?
Well, Liz, the secret to happiness is low expectations, and that's exactly what we had coming into the earnings season. Earnings were expected to drop 6.3%, and what we've seen already from 16% of the S&P reporting is that 78% beat, and they're beating on average by 5%, despite some of the earnings that you saw from Tesla, et cetera, some of the one-offs. So we remain constructive here. Not only are managers the most overweight bonds relative to stocks since 2009, they have the lowest growth expectations, they're the most pessimistic, and the most pessimistic towards real estate.
And you're saying that's a contrarian indicator right now?
Absolutely. Markets
Thank God.
don't bottom when everyone's overweight cash and bonds. They don't top. They top when everyone is overweight equities, and they're overweight equities with leverage, and there are no marginal buyers.
Just speaking on that, guys, like I said, however you invest your portfolio, like I said, I've got to come out with that video about how I have my portfolio set up and the recommendation of how you can build a strong portfolio that's separate from the one that you do your swing trades, and it allows you to be able to take these play with risky assets where you still know that you're building a monster portfolio in the background, and also give you something to be able to take from whenever, our momentum plays run up and we get some cash, take that cash, you can put it over into your long term, right? But this whole thing about screaming about bonds and all, that's a short-term answer to a long-term situation. Like that's just how it's been in my personal opinion.
Is higher, and that's why we're climbing this wall of worry.
I don't know. Luke has a look on his face like, Tom, let me get in here. I'm sensing a little bit more bearishness, or at least concern.
Yeah, I've got a lot of concern about a lot of stuff. But to what Tom says, we are staying invested. But as volatility gets lower to these levels, we put more volatility on. And as stocks are going higher, we're lowering our stock exposure. We're selling some calls against our positions. We think the good times have kind of been over. And there's a couple of worrying things. Number one, the S&P and the NASDAQ. The NASDAQ is up 20% for the year. The S&P is up 7 or 8. The S&P is made up 50% NASDAQ stocks. So over 50% of the S&P is NASDAQ stocks.
And haven't the leadership names been kind
All
of the same? Microsoft, Apple,
right.
who
all
else?
the same, all the same. And the interesting thing about them is that the ones that have the biggest balance sheets,
as I've been saying every single video, guys, you need to be buying into these stocks that have strong pricing power, which means that they have cash on deck. The companies of the future is how you're going to get through what's coming. I'm not worried because I know at the end of the day, if Tesla gone, we gone. You know, if Apple's gone, well, we gone. So I just know hurting certain stocks and asset different things. Oh, really? Get you some exposure in that. But Apple, Tesla, Nvidia, everybody's seeing this whole chat GDP trading thing and how AI is coming. We've been screaming this for months now, right? What a XRP, Sweet God, H-bar. You need to be moving into these and get ready for the future endeavors. Listen to how many of these financial, and that's why I keep bringing these videos. So every single day you're hearing, oh wait, these people are saying the same thing, similar, right?
Strongest balance sheets are the ones that have done well. Even in the energy sector, look at Exxon compared to some of the other companies. Microsoft, Google, Apple, although Meta was really beaten up, they have a big balance sheet. So we think people are kind of, and they're
not hiring pricing power.
They're not laying off people because they're expecting a lot of business. So even if the market doesn't crash, then they have to ramp up. There's going to take some time for that. And by the way, 2% inflation. I mean,
so
when
far
that
away.
happens, I'll be under 200 pounds again. that is not happening. My personal inflation rate is easily over 10%. This 5% stuff is, I wish.
Y'all heard that, right? Okay, you can play around if you want to. Now was the time the greatest generational wealth transfers occurring. You gonna have people that played with their money, right? Didn't invest it, didn't move it forward to something that was going to be able to surf these waves. And you got the people, even if you're half not right now, guys. Even if you're half not right now, $100 a week, $100 a month, moving into these things is going to carry you so far. But the America that we know is not going to be the America in 10 years. Your vast inflation. Inflation does not go down. My mom got sold us for 25 cents. I can't even get a piece of bubble gum out the bubble gum machine anymore for 25 cents. The bubble gum machine that you put the quarters in, twist, 50 cents, 75 cents. You sitting up here like, this is the weakest gumball I've ever had. Y'all got to realize inflation does not go down.
Wish it was 5% for me, but it is not.
Tom, I think Luke's right. You got to know what you're investing in.
Yeah.
I'm in the S&P 500. It's very diverse. It is, but there is a heavy weight to tech. Yeah. When you look at the Russell 2000, for everybody out there who says, oh my God, I absolutely love the small and mid caps, 16% of the Russell 2000 is made up of banks. And not gigantic ones. And if you look at what the Russell has done, since, I don't know, the recent high, which may have been around February, we're looking at a one-week chart now, but you can see the big drop-off, and that was before the financial crisis, the mini crisis or the mini panic crisis that they're talking about.
I know it was 16%.
I don't know. Can we put up since February? So there it is. You can see where we were. That was a two-handle. 2007 was where the Russell stood. We're at 1785 right now. Yeah. So let's just say you remain bullish and you're saying, Liz, so what?
Right.
Where do you love to salt in some of the cash at the moment?
It's a barbell. So we own Amazon, we own Alphabet, we own some of the bellwethers that have been beaten down, and they still haven't recovered nearly a lot. We also like the ones with a massive margin of safety, and I know Luke's going to give me a hard time over this one. Not all REITs are created equal. So we like distress and dislocation, but it's got to be the highest quality. We actually, during the mini crisis last month, we put on 2 trades to play the mini crisis. We didn't buy regional banks. We bought Bank of America, and we bought Vornado. Commercial real estate is
playing with the bank market right now.
Sector in the business right now. Why are we considering?
Well, nobody's going back.
No one's going back.
They're 20% vacant.
To the B and C properties. We think this is like the mall crisis.
See this guy on the left, he's like, what is this guy talking about?
And Simon Property did very well. They have the Apple, they have the Lululemon.
Right, B and C is business to consumer.
B and C is the lower level property. So with Vornado, you've got Madison Avenue, Park Avenue, 5th Avenue, 6th Avenue, like this. The best buildings in the best city in the world. And the stock, despite revenues being down 5% since pre-pandemic, Cash flow down 10%. The stock is down 75%. It's trading at a 40% discount to book. The worst case scenario is priced in. It will get worse, but as the labor market loosens, more and more people are coming back to the office because they're nervous about getting laid off.
Okay, so if Tom's got his barbell approach, let me just say that I was scrutinizing this Bank of America fund manager survey, and they had the most
30%
heavily
vacant.
weighted long-short trades that fund managers are in right now. The first one was long tech, short the banks. But the contrarian one is long the banks and short bonds. Are you anywhere in that alchemy?
We also run a little bit of a barbell, but right now we have some of the same names that he's talking about. The other side where we want to take risk and get some returns, we're doing through some structured products, taking 2 or 3 names. Last time I was here, we talked about NVIDIA. Now that's gotten a lot harder since the last time. I think it's up $80. Makes it a little harder. But
what he said?
I'm looking at some opportunities there. But again, I'm being really cautious because what I'm worried about are some of these REITs, and I'm not.
We're going to look back 5 years. I'm going to pull this up and be like, see, I told you. I told you I'm not as crazy as what I seem. And it really shouldn't seem that. I mean, investing is not some super complex thing. Hey, guys, AI is taking over. I don't know. How about investing in the companies that make the chips? And the biggest one, NVIDIA? What do we... hey, guys, EV's coming. I wonder who I think I should grab some Ford. No, wait. I think I'll go with Tesla. We know, you know what the future is holding. This is the time we're switching eras, guys. We're about to become the Jetsons. I'm about to be, pink, one XRP. Yes, I'm going to that movie. Pink, I'm telling you, we're here. We're here. This is the time to dig your foot in, and you need to put some cash down on it.
I'm going to get killed for it, and some of these other agency funds, some of the REITs have put up gates. Everything's fine. Everything's fine.
I'm picking up an NVIDIA stock every week. Every Friday, I buy one more.
Why are gates up? Why can't you sell the properties that you have at the same prices or lower, right? And I think some of these funds have promised maybe around 5 or 6%. They target it, and then they say we're going to have some upside. But one of your CDs paying 5%.
Well, that's also an issue too. Great to see you both in studio. Be still my heart, my traders. Tom and Luke, always a pleasure.
Hey man, that was some good. Hey, that was good information, good content. Make sure y'all go back and play that back if you need to. The time is now, guys. There's a lot of things that are going on. If you aren't feeling like, oh man, I can't get enough cash in right now. You can't get enough assets. You're in the right spot. If you buying these assets like there's no tomorrow, you're right where you need to be. Guys, double checking in. We right back for that. Tink. Goose egg on that 0% on our shares available to borrow. So like I said, we've gobbled that up, and I want y'all to just so we can all see how there's a stupid game being played with price action, but it equals nothing. Let's look at the numbers, and that's what we'll ride by. I ain't worried about nothing but the court date, and guess what? The court date ain't set right now. But what I do know is you're out of shares again, big brother. And I also have an explanation for that. So check this out. Intel dropped 3 million shares and 10,000 contracts, and that explains the appearance of these shares that we've dealt with the last couple of days. Synthetic, of course, but just I needed some correlation. I was like, where the hell are these shares coming from? Well, that's why. So that was Antera that did that nonsense. But yet, here we are, 0%, 0 shares of borrow, gobbled up. Y'all, they are in a chokehold. They're in a chokehold. Back up 258%, right? And yes, that sweet thing we all love. 26.86% short interest, baby. We are just teetering on the tip of that 27%, and I need it. I need it. And just so I can confirm, I've come along because that was, this is market beat. I used to think Fintel was high. Fintel's at 26.89, but slowly I've watched market beat creep up to the numbers that Fintel's been showing. So Fintel might actually just be accurate on this. Fintel's been showing 26.89%. Guys, the Bangalang, baby, sweet Jabuda. Look, 7 days to cover. Remember just, what was that? Was that Tuesday? Just Tuesday, the days to cover was 4. They've almost doubled in days to cover. Y'all, something is going on. Something is going on. But you want me to believe this is the trade in action. Do I look like I was a star of Beavis and Butthead? Do I look like I was a star of Beavis and Butthead? Do I look like Butthead? Because I'm just trying to figure out here, how could this price action correlate, right? And of course, we're barcoding, guys. We're side trading. We're teetering on that line. Looking for that move back to 560. This is all garbage. This is not a price action. We literally deal with the short attack. But now, like I said, they're out of those shares again. In a barcode across. Barcode. Oh, back up. Here's real price action. Look, this is what candle bars look like. Barcode. 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 Yep. Barcode. 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 I mean, guys, this is everybody seeing this with me? Is everybody seeing this with me? If you want to know the state of affairs for hedge funds and short sellers, here you go. Here you go. All right, guys, sweet Belanda. Here we go. AMC back on the threshold list again as of this morning. Oh yeah. Hey, I need my money. Can we stop playing these games? Y'all are toast. I really hope it's somebody's a short seller. Look, you're done. I mean, hey, these aren't my numbers. These are the numbers. And it's the numbers that's released. So we know it's got to be worse than this. Let me see. Pulling back up here again. I just wanted to pull up the showing this was somebody else that pulled up 26.89% and 7.10 days of cover. So like I said, I don't know if this is Fintel. I don't think this is Fintel background because their setup's a little different, but this matches the exact same numbers as Fintel. But bringing it back in, guys, I got a couple things that last notes I need to get off. One, this thing of Gary Gensler, guys, I know everybody, we're pissed off. We can't stand GG. But I'll tell you one thing. Voting him out, or like I said, and I don't really think there's really a risk of him being fired, but all the cheering of getting him fired, guys, understand, I know someone who's like, what the hell? I don't need somebody to protect me. Oh, yeah, protect me, huh? And pattern day trade. But you got to understand, think about it like this. Think about like a mother and a mother and a child, or a father and his son, or a father and his child. When you were a kid, your parents did certain things and just didn't let you do certain things. And we were pissed the hell off. What do you mean I can't go? Why can't I go out there? Up until one of your friends gets shot at the party, right? Guys, Gary Gensler knows how fraudulent this market is. When he says that he's looking out for the best interest of retail, he might really be looking out for the best interest of retail, just saying the simple fact of he doesn't want retail exposed to this. He wants retail going into plays that are blue chip things that we know, Apple's, Tesla's, safe plays, something that, but momentum plays are, which we all know after being in 2 years of this, the most fraudulent, most arbitrage set, most fugazi plays you can be in. Even if you win, there's a nut, they're going to cheat, right? I say all that to say that the people that are going to, like I said, if Gary Gensler did go, I forgot what the name was, but I think it was John Hester. I don't know if that was just the guy who was interviewing him, but the people that would follow behind Gary Gensler voted for payment for order flow. They voted against market transparency. So you got to understand that while everybody's getting up in a firefight, getting rid of Gary Gensler might be the worst choice that you could do. Because there's no guarantee the person that follows him is going to be a godsend. And if you've been in this, first off, market long enough, in the financial market, and if you've seen the face value what the government is, I put 9 times out of 10 that it's just not going to be a great person that's going to follow up, especially when the candidates are people already voting against things for retail. Let's see. Last part that I want to follow in on, guys, is this simple fact. I'm not here to sever communities, point fingers, but at the end of the day, guys, I'm watching, and it's really a specific YouTuber, but this whole thing of the reverse split is going to save our stock. Guys, prove it. Prove it. If you so fully believe that, then prove it. What information do you have to prove that them taking the pressure out of a stock and diluting it, diluting the stock is going to make a short squeeze happen? Not price movement up. We're talking about a short squeeze. How taking all the money that they owe and all the shares they owe away and making the thousands of shirts into 100 shirts is going to cost a ravaging price to 1,000. Like guys, you want to tell me something? Well, tell me this. Tell me this one. Yeah. Tell me this one here. Tell me this one here. What happened with this one here? When nobody could get get access to their shares. Settlement occurred, and here we go. Oh, yeah. That reverse split was amazing for COSM. Woo, yeah. You hear me? Woo, to the moon. Guys, show me a play where a reverse split equaled a MOAS. And if you can't, then why are we pushing that? You've been in this play long enough. You know what's going on. They set up for arbitrage. They set up to go against shareholders' votes a year ago. And you're sitting up here still telling me you think that what this man is suggesting is for you? Hey, guys. Hey, my retail family, I'm glad to have y'all here. Everybody that comes in and watch my channel, everybody that's a fan, listen, I love y'all, man. I love y'all. I'm glad that we can keep bringing content. Like I said, that's why we up one. That's why we already knew about the motion thing, baby. Hey, we're bringing real facts here. I'm not really here to just do the, hey, don't get me wrong. I love AMC as just as much as the next guy. I love meme stocks just as much as the next guy. I love trading totally, though. That's my thing. It's the financial freedom for me. So I'm not going to just be in a behind nonsense. I take this stuff as ways to learn, but if you're not learning from what's going on, you're about to be a victim of this market. You need to be taking, this is your tuition. You're about to graduate college of stock. But if you've been going through all these 2 years, 2 years and some change, and you haven't picked up on being able to know when something smells fishy, hey, that's on you. And again, not every person on YouTube is genuine. You have to remember that now. If certain things you ask them, well, how? Well, why is 90% of people saying this and y'all few are saying this? That was similar trade stories. They love the guy, but he was avidly against, no, listen, we need it and we should, the company should do it. Where you at now? As it got smoldered, as he started realizing how many people got damaged by the fact that he wouldn't lend an ear to the possibility that maybe AA is not on your team. But that's nonetheless, baby. Y'all hold that thing down. Love y'all boys. Hey, till the next video. And like I said, you know, we're going to keep bringing bangers, baby. Hey, yes, sir. Let me get it one more time. Yes, sir.